Hi, Carrie.
Hi, Bob.
How you doing? Let me move over to my office, otherwise known as the living room. All right, yeah. Oh. Well, hard to believe our last lecture, huh?
Is it? Okay.
Unless we do some kind of review. I've looked at the final exam and the next test. I don't think they're a buzzsaw like the others. Okay, so let's see what we can do here. Come on, come on. Yeah. Yeah, chapter 12 is about the employer's piece of the payroll.
I mean, chapter 9.
Chapter 9.
Okay.
Chapter 12 is at 2:30. Except for my other 2:30 class, which is chapter 10, but I digress. Chapter 9, PowerPoints, huh? It's coming.
Okay.
Okay, I think we're ready to try to share here. Okay, see the PowerPoint?
Yep.
Okay, so far so good, huh? All right. Now we're talking about the employer taxes.
Right.
And the employer matches the Social Security. We understand that now, right?
Mhm.
Maybe we don't. Maybe haven't talked about that yet. Describe how the employer payroll taxes. Good. In addition to the gross pay, the employer pays payroll taxes. So the employees, they pay FICA, right?
Yeah.
Social Security and the Medicare piece of it. The employer matches that.
Yeah.
So let's understand that. That's important, okay?
Mhm.
So the employer and the employee each pay the FICA two pieces,
Mhm.
the Social Security and Medicare. The employer also pays FUTA and SUTA, federal unemployment taxes, state unemployment taxes, okay?
Yeah.
And they have various rates, so let's take a look. Both the employee and the employer pay the FICA taxes. Social Security is 6.2% on 128,400. We talked about that.
Yeah.
Medicare, there's no limit on Medicare. The Social Security, Medicare is called a flat tax. Social Security is a regressive tax. The more you earn, the less you pay. Basically what we're talking about. The amount of earnings subject to Social Security tax is obtained from the payroll register. And we remember the register, right?
Yeah. Where depending on your how many deductions and stuff like that.
Yeah, it's the record of each employee in terms of their, we have the earnings, and then we have the taxable earnings out over here. And then the next slide would be the deductions piece. So it's just to look at your gross to net pay, okay? It's also called your journal entry. Your journal entry comes right from here. Your gross wages would be your debit to salaries and wages expense. And all these deductions you see here are called withholdings for, is the best way to call them. And they're liabilities. They're the company liability. It's not the company's money. but they have a duty to turn it over to the proper taxing authority.
Right.
Self-employment tax. Hold on one second. Self-employment tax paid by people who run their own business. You're probably familiar with this if you run your own business.
You gotta pay the double.
What's that?
You have to pay both sides.
Absolutely. You got the double tax on the Social Security. So you're starting off 15.2% in the rear with the double tax. Self-employment paid by individuals who run their own business. They do not receive salary or wages, but they do have earnings in the form of the business's net income. Self-employment tax is contribution to the FICA program. So self-employment tax rates are double the Social Security and Medicare. Employer futa. Only the employer pays this. It's not deducted from the employees. It funds the current federal state unemployment compensation program. The current rate is 6%. It varies from from company to company, actually, not state to state, company to company. And employers are allowed a credit of 5.4%. That 5.4%, that might be changed by now. But food taxes are also collected from information in the payroll register. The key thing is, go ahead, I'm sorry, Carrie.
So I don't understand the credit, the 5.4% credit.
The 5.4, the total unemployment you're gonna pay is 6%.
Right.
0.6 is the FUTA piece. Then they knock off, boy, you know something, I'm not even sure how to express that, to be honest with you. Employers
So
are
it says, it says the rate is 6%, but usually you get a 5.4% credit. So basically you're only paying 0.6%.
on the federal side, yeah. On the federal side, you're only paying the 0.6. On the state side, you're gonna pay whatever your experience rate is. In this case,
so why don't they just start off by saying it's a 0.6%? Why do they even say it's 6%? I don't know.
well, it's not 6%, it's 0.6%.
Right, but it says the current rate is 6%, but then they get this credit of 5.4.
Yeah.
Everybody gets that credit?
Yeah. Everybody's gonna be paying the 0.6 in this book. It's really 0.7 now. Yeah. The total actually is now, I believe, is 7%. 0.7 comes from the federal side, and the rest is from your experience rate on the state. But that's a good question, and I got to read it a little more clearly so I can express it a little better. The key thing here, Gary, is that $7,000 limit. You see that?
Yeah.
Current rate is 6% applied to maximum earnings of 7,000 for each employee.
Per year?
Per year.
Okay.
So it's really a small number. So 7,000 times 0.006 is $42. So the limit is $42 per person, okay? But it's only on the first 7,000.
Got it.
SUTA is levied on employers in most states. State tax funds used to pay unemployment. The rates vary among the states, and they'll vary among companies based on their experience rate. In this text, the SUTA rate is 5.4 applied to maximum earnings of 7. So that 5.4 we saw back there, like I said, that's the state piece of it, the state unemployment.
Oh, so altogether between SUTA and FUTA, it's 6%.
That is correct. That is correct. You're just going to pay two different agencies. The 0.6% you pay to the federal government with your Form 940, and the SUTA goes out on the DE3 to the state.
Okay.
So the SUTA rate is 5.4%, again, up to 7,000.
Yeah.
And now most states have an experience rating system to encourage employers to provide regular employment.
Yeah.
So you can influence, you can affect your state unemployment rate if you have a steady workforce. Somebody like McDonald's, where you have young workers coming and going, they would have a rather high unemployment rate.
Yeah.
Smaller, business with, like a bank where people never quit. You have a low unemployment. If the employer has very few former employees receiving unemployment, the employer qualifies for a lower state unemployment tax rate, and the full federal credit is still allowed, even if the employer pays a lower rate.
And so how much does that fluctuate, that lower rate?
That's a great question. I really can't answer that. I really don't know. But
Okay.
if they're using 5.4% as a base rate, I would
Yeah.
imagine somebody like McDonald's might be double that. I mean, because they're
Sure.
really drawing on the system.
Yeah.
Okay.
Yeah.
Whereas, smaller, place with no turnover, they might be in the 1-2% range. Again, good question. Computation of employer taxes. The calculation is as follows: Social Security, 6.2%, up to 128,400. Medicare, no limit, 0.0145. And FUTA is 0.006, it's 0.6%. And the state unemployment is 5.4%. So you just multiply them out, and that's what you get. So that's not too bad so far, huh?
So wait, the FUTA is, I thought it was up to $7,000. Oh, I'm sorry. Wait, 360
is how
times.
much in this example, that's how much money was earned.
Oh, okay.
So they're nowhere near 7,000. Okay.
Yeah. Got it.
Just for example purposes. Account for employer payroll tax expense. Oh, we don't need to go through this long thing, I don't believe. To the steps: obtain the records, go to your payroll register, Social Security multiplied by 6.2, then you got your 1.45, the 0.006, and the 5.4%. That slide probably should have come before this one,
Yeah. Okay.
And look at your journal entry. The payroll tax expense is debited, and you don't have to break out what kind of payroll tax expense it is, okay?
Yeah.
Just call it payroll tax expense. Where you do have to break it out is in the liability side. Social Security payable, Medicare payable, FUTA and SUTA payable. So the employer payroll taxes for the week ended December 19 are presented. A journal entry is needed to record the expense and liabilities. Usually debit all expenses to one account. That's how I've seen it when I was out in the workforce, and credit separate accounts for each type of tax liability.
So
For
wait,
the week,
debit and credit. Got it. Okay.
yep, you debit the payroll tax expense, one lump sum number.
Yeah.
Then you credit in detail all of the liabilities, because you're gonna have to pay them to different people. Social Security and Medicare goes to the feds. FUTA goes to the feds, but on a different form. And then SUTA goes to the state on the DE3. And they're just introducing you to new accounts you're seeing for the first time: payroll tax expense, Medicare payable, FUTA, SUTA. So accounts used in payroll tax accounting: payroll tax expense, the payables. You get the feeling they're kind of padding these slides, Carrie, because there's not much here.
Right.
But here we go. Payroll tax expense, that's everything. And then Social Security credited when the taxes are imposed, debited when they're paid. Debited when they're paid. Don't ask me when you have to pay these things, because it varies according to earnings, and I'm not quite sure.
Yeah, well, I was reading in the chapter, depending on how much you make, you have to pay more often, right?
That's
and
correct.
Then to the point where you have to pay daily. Daily?
I guess so. If it's a certain amount of money, the government wants its money right away, huh?
Yeah.
Yeah, it used to be 7 days where I worked for many years. I used to like to do the payroll deposit. It gave me an excuse to leave the office and take a walk across downtown Los Angeles to the bank. And I still remember that, going down there, and on the way mailing the tax returns. Well, Here, you go looking for a raise, you go to your boss and you say, boss, I'm making $26,000. I'd like to get a raise to 27,500. And the boss will tell you, I'm already paying you a lot more than that. The boss is being a wise guy because
You're
he's
right.
paying you the gross wages, plus he's showing you his share of the taxes. Okay? Did I ever
Yeah, so
tell you this? Pardon me?
it's about like between 9 and 10% more than what you receive, your
Yeah,
gross wage. They're paying.
absolutely.
Mhm.
Absolutely. It's a considerable difference. And the
Yeah.
employer might also have things like he's contributing to the not the IRA, but the 401k,
Yeah,
and there could be some others. Did I ever tell you the silly story where I wanted a raise when I was making $135 a week?
tell me.
I went to my boss, Murray Weitzer. What a nice fella, typical New York Jewish gentleman,
Uh-huh.
very funny. And I went in for in those days you had the annual review with the boss, so I go in there, and he says, "Oh, Bob, you've done a good job. Very happy, Bob." He says, "So I'm happy to tell you I can give you a raise from 135 to $145." I said, Murray, geez, I appreciate it, but I was really hoping to go up to 160. That would get me up to $4 an hour. Yeah, is there any wiggle room here? And he goes, "Hey, 160." He goes, so finally he says, "Okay, I'll give you the 160." He said, "Just don't tell anybody about it." And I said,
Okay.
"Don't worry, Murray, I'm as ashamed of it as you are." College graduate making $4 an hour. But
Yeah,
again, different days.
right.
Oh, come on. Describe employer reporting and payment responsibilities. Employer payroll and payment responsibility areas, federal income tax withholding, FUTA, SUTA. And now they're talking about the different forms that the employers work with. We're all familiar with the W-2, right?
Yeah.
You've been out in the workforce, you're going to get a W-2 at the end of the year, detailing your taxes and your withholdings.
Yeah.
And then you have the W-3, which is a cover sheet for the W-2. Excuse me.
Let's see.
Oh, maybe picking up a little allergy here.
Mm.
Yeah, the W-2, you get that, each employee gets that at the end of the year in January, actually. And the summary of wages and taxes, that's the W-3. So the employer, when he sends in his copy of the W-2, there's a W-3 on top, which is just a total of all the
Like
W-2.
a summary.
Yeah.
Okay.
And then the employment eligibility verification, they have to keep the I-9 forms around, making sure you're eligible to work in the country.
Got it.
Three important aspects of employer reporting and payment: determining when the payments are due. And like we just said, it can vary from 1 day to a week or more. Use of electronic funds, I think that's pretty much mandatory now, huh? I don't think anybody walks across downtown Los Angeles with a check in their hand, put in the bank. And the 941. The 941 is the quarterly federal tax return. It covers both the federal taxes and Social Security and Medicare. And here we go. Less than $2,500 at the end of the quarter, you can pay at the end of the month following the end of the quarter. And then if it's 100,000 or more, it's due the next banking day, like you were saying, huh? So depending on how much money is involved. The look back period identified and figured is the 4 quarters 2 years ago, ending the June 30th, 1 year ago. Large amounts of payroll taxes in the lookbook require future deposits. Here, if you're paying a lot of money, if your experience is you're paying a lot of money to the government at tax time, they want you to prepay it a year or so later. They don't want to wait for their money.
Yeah. So I have a tax question. I don't know if this applies, but okay. So last year I did my taxes, and then my accountant said, you should prepay for 2021. So I did twice, I think. And
Okay.
and I just got a notice from the IRS that they're sending me back a bunch of money. I'm like, I was prepaying for this year. I don't know why they would send it back.
I don't know either, unless you really overpaid. Maybe you said you paid twice. Maybe they were just looking for that first
But
payment.
but like it's already been 3 quarters, right?
Yeah,
So paying by quarter anyway.
yeah, that's interesting. I guess the answer will come in January when you do
Yeah.
your taxes for this year. If you
Yeah.
end up with a fairly small refund or a fairly small liability, then I'll tell you that they judged it right.
Mhm.
So, yeah,
Well,
nice to get.
it's nice to get a letter that says they're sending you money.
Yes, exactly right. I got a letter the other day, and I could tell it was a check from the Auto Club of America. I ripped it open. It was $5 for some kind of
Woohoo.
refund. And it's been sitting in my wallet till I get
Yeah.
to the bank.
Yeah.
Okay. So the deposits have to be made with electronic transfer, and
Mhm.
each deposit requires a journal entry. The deposits include both the employer imposed taxes and the employee's withholding. So what does the journal entry look like? Like this. It's a debit to all of the payables and a credit to cash. A debit to all the payables and a credit to cash, okay?
Mhm.
You familiar with the Form 941?
Yeah.
Okay. It's filed it's filed each quarter, April, July, October, January, at the end of the month. And it reports both the taxes withheld for federal income tax and Social Security and Medicare.
Mhm.
And just a quick look at it. They start by asking you the number of employees you have, and then you go to your W-2 and you come up with the total wages, compensation. You then put down the tax amount that came out, federal income tax. Here, they're doubling up the rates for Social Security and Medicare, which are paid by both the employer and the employee. So
Uh-huh.
rather simply, you have the gross wages minus your taxes from federal, minus Social Security and Medicare, and coming down to a total of 1902.70. And then we go to the next page where they reconcile it. Over here, how much did you pay in month one, 632,570? Everything agrees. And typically you're going to be off a penny or a nickel or something that they don't really worry about. But as long as you get it within a few pennies, you're okay with the reconciliation.
Okay.
And there, when you send the form in each quarter, here's where you're making the payment. So you're debiting the payable to reduce it and crediting cash.
Mhm.
Calculated quarterly, it's due at the end of the month following the close of the quarter. A deposit is required only when the accumulated liability exceeds 500. Liability is 500 or less, amount is added to amount to be deposited for next quarter, okay?
Mhm.
The Form 940, you must know this one too then, right? The 940?
Yeah.
This is your federal unemployment tax form. And it looks similar to the 941, except here they're interested in your federal tax salary. So here they have a total salary of 343.4. How much is subject to the people who worked under 7,000? It's 280. And you multiply it out by 5.4, and there we go. So that one's pretty simple.
Got it.
Again, it can be a pain in the neck though when you used to do them manually.
Really?
What, manually? Yeah, we always did them. I had to do them in ink. Yeah, up until a certain point in time. Back in the 70s, you had to do them like that. The 70s. SUDA, you debit the payable, you credit the cash when you pay the bill, when you make the payment. And then they're going to show you the W-2. And look at all the copies of this thing. One copy goes to Social Security. One goes with the federal tax return. You keep one. There's one for your records. And then there are a couple more for state, city, perhaps county. And there's your W-2. In this case, this employee had wages of $32,665, which means they didn't hit the Social Security limit. They were subject to the Medicare, and I don't see anything else about 401k or anything. And here they're showing what was withheld. W-4 for Mr. Icestone. And then the W-2 goes out with the cover from the W-3 due by the end of February. The employees must have their W-2s by January 31st, but the company has until the end of February to actually file their W-2s. So they got 2 months.
Got it.
And this is the W-3, which is the same exact format, same template as the W-2. It's just a roll-up of all the numbers, okay? Well, you have to be eligible to work in this country, and you have to prepare a 9-9 form. I don't think you file this one with the government. It's not filed with the government, but you have to keep them in the employee record file. And they must be retained in case Homeland Security or the Department of Labor or somebody wants to come in and look at the records.
Right.
And you have to provide 2 pieces of ID, unless you have a passport. A passport is sufficient to determine eligibility. Describe and account for workers' comp insurance. Okay, workers' comp insurance has nothing to do with payroll per se, okay? Workers' comp is paid by the employer. It's an insurance policy covering injuries on the workforce. It provides insurance for employees who suffer a work-related illness or injury. It's required by most states. The employer usually pays the entire cost. The employer pays the entire cost, and that cost depends on the number of employees, riskiness of the job, and the company's accident history. The rate would be higher for commercial fishermen compared to office workers.
Right.
The last time I was in the classroom, I had an inordinate number of Asian students, you know, and when I gave them the test, the question was, which of these occupations would have very high workers' comp? And I put down a lawyer, a salesman, a doctor, and an underwater demolition expert. And every one of the students came up to me and they didn't know what the underwater demolition. I ended up showing them a video of World War II, the Battle of Midway. They finally figured it out. The employer pays the premium at the beginning of the year based on estimated payroll. So you're estimating your payroll for the next year. And then any difference between the two is going to be adjusted. So in our example here, Lockwood Company expects to have a payroll of 210,000. Its unemployment rate is 0.002. You multiply it out, it's $420. So then the year comes to an end, and it was actually 220,000 that they actually worked. You multiply that by the 0.002, and you're going to come up with a difference of $20, which is adjusted at year end, okay?
Right.
So workers' comp is very controllable by the employer. You have a good, safe place, you're not going to pay much in premiums, as opposed to a more dangerous job like commercial. I think commercial fishermen is very considered one of the most dangerous jobs. What if their payroll was less? Well, you're going to get a chance to credit an expense, which you don't often do. You credit the expense and you debit a receivable because you got money coming back to you. And that's this entire chapter.
Okay.
So this one was hardly a buzzsaw, huh?
Yeah, no, it was easy.
All right. Well, I wish you luck on the test. Do you have any questions here?
No, that all seems pretty straightforward. And
Okay.
so what's the next test or whatever? Is that the final?
The next test is the Monday after Thanksgiving.
Hmm.
And that covers chapters 7, 8, and 9.
Okay.
Then the following week, there is the final exam, which is comprehensive.
Got it. Okay.
Okay.
Yeah.
I don't know if I'm going to hold another class.
Okay.
Maybe I can offer a review session, but really, it's not too tough to test. We want people to succeed in 110 to encourage them to go into 230. So we're not trying to blow anybody out of the water. Okay.
Yeah. Yeah. Okay.
All right. Been a pleasure, and I'll see you in 230 next semester for sure. Right?
No, I'm not gonna go on.
No, are you nuts? No way. I'm taking 230. Okay. Well, good luck to you. Thank you so much.
Hey, have a nice Thanksgiving and thanks for this class.
Okay. You too. You're welcome. Happy holiday. Bye-bye.
Thanks. Bye.